Good morning, friends and fam. Welcome to the first midweek tax help of February. Can you believe it is already February? So, with this week's midweek tax help, I just want to give you the top 3 ways to audit proof your small business or even your large business, but any business that you may have, whether it's Schedule C, LLC, corporation, S Corp, partnership, any of those, give you the top 3 ways to audit proof your business. Keep in mind, the IRS will start accepting and processing tax returns on February 12th, so that's next Friday. So go ahead and start getting your paperwork all together and get everything submitted and make sure you file on time, especially to be in line for future stimulus payments and things of that sort. Okay, so let's get started. Top 3 ways to audit proof your business. Number 1, do not make sudden changes with the IRS. Usually, like I tell my clients in my experience, try to keep everything consistent. If you have, certain expenses that pertain to your business, not saying that they won't fluctuate year to year, but sudden weird changes that look a little bit off to the IRS usually trigger an audit. So just be prepared for that. So sudden changes, meaning, all of a sudden you just start deducting, let's say a car, but you've had this car previously, but you're just now starting to deduct the the mileage and everything on your tax return without backup and proof. So you want to make sure you have the backup for it, your mileage records or your interest payments or your actual expenses such as gas, repairs, tires, things like that. Okay, so that's number 1. Try to avoid sudden changes in your tax returns as much as possible. Number 2, keep every receipt. Record every receipt. What I mean is you need to have backup for every expense that you have. Track all of your expenses. It is very, very key and important to small businesses, especially those who file on Schedule Cs as self-employed or 1099 contractors. You must keep a mileage log and a receipt for every expense that you have. You need to be able to justify that in case of an audit. So it's better to have it with you and make sure you go based off of those numbers and not inflate any of the expenses just in case. Because again, with the IRS, anything that looks off will trigger an audit. So you don't want it to look off. Like for instance, you don't want to put $50,000 of expenses in just office supplies. So what I mean by that, let me break it down. If you put $50,000 in office supplies, they're going to want to know, well, what the heck? Who spends $50,000 on office supplies? What kind of office supplies do you need for this business? So what you need to do is utilize those other lines and itemize your expenses in your tax returns. Okay, so the IRS code allows for up to $5,000 in startup expenses to be grouped together in one line for startup expenses if you're doing an LLC or corporation or even your Schedule Cs. Okay, so to get the maximum benefit amount of that, you can itemize out all of your expenses. So if it's, you don't want to group, categorization is key. So you don't want to group everything into office supplies. Even if it's stuff you need for your office, try to spread those expenses out, and try to itemize them out so that IRS knows exactly what those office supplies were, because just the general category of office supplies could be anything. And they're going to say, oh my gosh, $50,000 in office supplies. And then if it's a business that they think doesn't necessarily use that much in office supplies, it's definitely going to trigger an audit. So avoid that by itemizing out your expenses under the other expenses or other deductions. Don't group everything into office supplies, okay? And number 3, again, I know I mentioned it in number 2, but this is number 3, categorization. The way you categorize your income and expenses is very, very important to your tax returns. So if you use a software like QuickBooks or any other accounting type of software, make sure your chart of accounts reflects your true actual income and your true actual expenses, and make sure they are categorized by what they are, and you have supporting documentation. When I say supporting documentation, I mean receipts, invoices, canceled checks, anything of that nature. Make sure you have all of that to supply with it in case of an audit. So the best way to avoid an audit is how you categorize your expenses and how you categorize your income, and include all of your income, even if it's cash. If somebody handed you some cash, but it was for your business, record that on your tax return, because guess what? If you put that into your bank account, it's still going to register, and the IRS is going to want to know where this cash came from. So you need to make sure you record it in your tax software. I don't care if you use a spreadsheet. Put in there, this income, such and such paid me cash for this service or this product. Okay, so let's go through those again. Top 3 ways to audit proof your business. Number 1, avoid sudden changes in your tax returns. Number 2, make sure you keep backup for everything, receipts for everything. Also your income, track your income. And number 3, categorize your income and expenses appropriately. Okay, those are my 3 top ways to audit proof your business. We can go a little bit more in depth. I may do a video later on to give you an idea of some different expenses and deductions that actually work for your LLCs and your Schedule Cs and your corporations and everything like that. But I just wanted to give you the top 3 ways to try to audit proof your business. So remember, number 1 is to avoid sudden changes in your tax returns without documentation. Number 2, make sure you keep every single receipt, invoice, track all your income, everything. Your mileage especially. Mileage is a big one, especially on the Schedule Cs. Mileage is huge. Make sure you have a mileage log that you can track and say where you're going, what your starting mileage was, where you went, why you went there, and then what your ending mileage was, okay? And then number 3 is to categorize. Categorization is the key to avoiding an audit, because you need to be able to categorize where your money came from and what you spent your money on. So keep that in mind, where your money came from and what you spent your money on, okay? And keep it itemized. If you itemize it, you can deduct more of those expenses than if you just group them into general categories. Grouping a large amount of expenses into one general category will definitely trigger an audit with the IRS. So those are my tax tips for today. My midweek tax help. I'm Latoya Tillett, owner of Tax Plus Financial Services. I look forward to talking to you guys next week. Next week, I'll be coming to you with either the deductions for the Schedule Cs or the LLCs. But just stay tuned. See you next week. Bye-bye.